You've done the work to get into a Golden Visa fund. You've cleared the KYC process, signed the papers, wired your money, and started your residency journey. What happens when you need to get your capital back? Today, we're going to talk about a specific risk that can derail your plans, the liquidity risk. Liquidity risk describes a situation where your investment becomes locked up, cannot be converted back into cash when you need it. This is a common and often considerable risk in private illiquid investments. Many Golden Visa funds are private illiquid investments. As we discussed in my video on open-end versus closed-end funds, many Golden Visa funds are closed-end. They have a fixed lifespan, typically 6 to 10 years, and invest in things that are not easily or quickly sold, such as private companies or solar project financing. In contrast, open-end funds tend to be liquid with more options for early redemption. Here are some liquidity risk scenarios. Suspended redemptions. Even in open-end funds, managers can impose redemption gates or suspension provisions to limit or completely halt withdrawals during times of market stress. Failed exit. For closed-end funds, if the manager cannot find a buyer for the fund's assets by the maturity date of the fund, your capital remains locked out, and the fund may extend its term. No secondary market. In practice, there's almost no secondary market for Golden Visa fund units. You can't simply sell your stake to another investor, leaving you trapped until you have the opportunity to exit the fund. This is not a risk that is exclusive to Golden Visa funds. Liquidity risk is inherent to all private investments. Liquidity risk can have severe consequences. You can find yourself in a situation where you need capital for a family emergency, a new investment opportunity, or required minimum distributions from your retirement account if you used IRA funds for an investment despite all salient warnings not to in my video, Why Using Your IRA for a Golden Visa is Asking for a Disaster. But you can't access the cash. And if you can exit the fund early, know that this can destabilize your residency status. Remember, you must maintain your investment for your entire temporary residency timeline. If you choose to redeem from a fund subscription early, you are essentially also choosing to exit the Golden Visa immigration process early. Avoiding liquidity risk requires proactive due diligence. Here's what you need to do. Scrutinize the exit plan. Don't just look at the fund's stated timeline. Ask the manager for a detailed, plausible exit strategy. Look for a plan that doesn't rely solely on a single speculative event. Require transparency on redemption. Read the fine print in the legal documents. Are redemption rights guaranteed, or are they subject to manager approval or market conditions? Are there fees attached to redemption? Note, there will be custody fees attached to redemption. Investigate the asset class. Are the underlying assets truly illiquid, or are they investments that could be sold? Some funds invest in assets that are easier to liquidate than others. Look for a track record. Ask the fund manager and the fund sponsors if they have successfully exited a prior fund and returned capital to investors, particularly to retail investors. If the answer is no, you might be the guinea pig for an unproven process. Keep in mind that in the case of Portugal's Golden Visa program, the vast majority of funds are too young to have exited. So you'll be looking for a track record with retail investors beyond the Golden Visa context. The due diligence to avoid liquidity risk is not about trusting a fund sponsor or fund manager. It's about verifying their plans. Liquidity risk is real and a dangerous risk that can have significant impact on your financial well-being. To help you start your own due diligence, I'm offering access to a video I created for my masterclass, the Don't Get Burned Golden Visa Risk Masterclass. In this video, I walk you through an anonymized sample of some Golden Visa funds redemption terms so that you gain a solid sense of what to look for. To access this video, click the link in the description below.